The election euphoria swept the markets yesterday as Bharatiya Janata Party clinched victory in 3 of the 5 states and just fell one short of majority in Goa. The S&P BSE Sensex printed 1,595 points intraday while the Nifty climbed 400 points. The BJP strode ahead of the Samajwadi Party in Uttar Pradesh while the Aam Aadmi Party cornered a landslide win in Punjab. The BJP also reigned in Uttarakhand, Manipur and Goa, the other 3 states for which elections were held last month. Though the election results were for assembly polls, this assumes significance as these are seen as a pointer to general elections which are 2 years away. According to Amnish Agarwal, state polls are touted as semi-final before 2024 general elections have some impact on the direction of economic reforms and visibility of Modi-led government beyond 2024. Given that it included UP and a state from the northeast makes it very important. The mandate, analysts say, is a good omen for investors from a medium-term perspective as majority states have shown their overwhelming acceptance to work done by the ruling party. Another interesting sub-trend is the emergence of a new creditable alternative to the existing parties on the national stage with pro-populist policies around management efficiency. Both philosophies, analysts say, will lead to focus on efficient governance, which is a good long-term indicator for investments in India. We have Ambrish Balega with us to elaborate on what BJP's win means for investors.
The exit polls had shown that BJP is in an advantageous position except Punjab, with a close fight in Goa and Uttarakhand. The actual results declared it shows that there's a clear improvement on that, thus proving that BJP hasn't lost steam. Investors normally look for a continuity of the incumbent government, which has delivered the results and would be in a position to speed up the reforms. So these results actually add to the confidence of that thought process. Going ahead, I feel that this bounce may not really be a start of a fresh up move. This is more of a sentimental bounce back based on the news flows. The global economy could continue to face pressure due to sanctions against Russia.
Devarsh Vakil of HDFC Securities meanwhile says the election euphoria may not last long as potential macro shocks weigh on sentiment.
BJP is retaining power in Uttar Pradesh. Based on this mandate, the central government will be buoyed to carry out its agenda confidently and look for opportunities to pursue economic reforms. We expect markets to trade cautiously post the initial euphoria, as these election results come in the economic backdrop that is not conducive for a sustained bull run. Fears of inflation post high energy cost and normalizing monetary policy will keep in check the stock prices around the globe, including in India.
The market's fag end trade yesterday confirmed Vakil's fears. The benchmark indices failed to hold on to their gains as global cues remained fluid. The BSE Sensex slipped nearly 800 points from the day's high to end at 55,464. The Nifty 52 cooled off around 160 points from the intraday high to end at 16,595. Given the global headwinds including simmering Russia-Ukraine tensions and swinging commodity prices, analysts suggest investors exercise caution. Aishwarya Dhadich of Ambit Asset Management says investors need to be vigilant because the uncertainty of geopolitical standoff still looms large. Commodity prices are least likely to see a secular downturn even after war subsides because sanctions will continue to disrupt the global supply chain. Unless sanctions are withdrawn, the global markets can remain volatile in the coming months and India will not remain insulated. On Friday, global cues including commodity prices, Ukraine war, European Central Bank's interest rate decision, and inflation and jobs data for the US will continue to sway indices.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.